I want to talk about the directional index here, and as we have this V-shaped recovery here, you can see the index makes a left shoulder, a head, and a right shoulder before it crosses into positive territory. So when this cross happens and the yellow line is above the pink line, it's a pretty clear indication that the trend changed and prices are going to go up. Now, there's a couple other things to keep in mind. We had this happen with the pink line crossing above the yellow line here, and that was a good indication that prices were going to go down, and they did. And we talked about this area that was mostly sideways because occasionally these things can cross and just not mean anything. Well, let's just leave that there. So we already discussed this whole breakdown, and this is what I talk about in my trade book, is this type of pattern like this. I break it down intraday where this happens repeating daily, both these patterns. But here it's on a daily chart, so it just takes a lot longer to play out. But last time I mentioned the blue line measures the strength of the trend. Now stay with me. When it starts to slope up like this, that can be a pretty good sign. And so if we're focused after the sell-off is done and we're recognizing, our pattern here, the other pattern that we see is this, the positive trend starting to go higher lows right here. So it starts to diverge. And when it diverges at the peak of the head, that could be a pretty good time to get in. And the things that it has going for it is that, this starts to slope up. This is oversold and comes up. And then we have this engulfing that takes the average. So this is probably where I'd want to recognize to get in, but it's a hard thing to do because you're scared that it's going to go back down. But then here, where it has the other head or right shoulder, could be the other spot to get in when it takes the second moving average and it starts to set up that this trend is down. And then you can capture some good gain here, but it you're basically having a bullish momentum look in bearish territory, and now it's bullish in bullish territory, although it's peaking, and there's really no trend. And so my concern is that here it could drop and start a new trend down, especially with this flattening out. However, as we've seen many times in the past, as this is above the overbought line and staying above the overbought line, we could just see a period where prolonged continues to push up higher. But I'd keep an eye on it, and because the recession indicator is cautionary until the fall, I just kind of hang out and wait. There could be a rule like buy in May and go away, sure, but I'd still just be careful out there because of how long things were uncertain for. But having these peaks here, and you see the same thing back here, you can see these are good times for things to turn around. And I talk about the top turnovers, but I really focus mostly on the periods that are following prolonged interest rate inversion, which means that when you have an uncertain environment, a breakdown like this could lead to a pretty nice sell-off, which it did, but it didn't break and really sell off and make a new low. But you just want to be careful that it doesn't do that out here. and that if it's going to push higher, that, you know, what you're seeing shorter term is supporting that, and that, you know, here you have a pretty nice trend. And what I teach in the trade book is how to catch this reversal, or how to catch this drop, those kinds of things, and then to manage your risk with options.